The Fed Chair Janet Yellen is prepared to tell the House Financial Services Committee when it comes to monetary policy, quoting now, monetary policy is by no means on a preset course. The Fed funds rate path will depend on the data. If the economy were to disappoint, a lower path to the Fed's run rate would be appropriate. But she also goes on to say the FOMC anticipates economic conditions will evolve in a manner that will warrant only gradual increases in the Fed's funds rate. Drilling down a little more on the economy itself, she says it has made progress toward maximum employment. However, inflation is low in the near term due to declining energy prices, but the FOMC expects inflation to reach its 2% objective in the medium term. There's a fair amount of language about what we'll call, let's say, economic headwinds. Among other things, she says there's still some slack in the labor market. Fourth quarter growth has been slowed down due to a weak net exports, negative investment, especially cuts in the drilling and mining sector. Financial conditions, her testimony says, are less supportive of growth due to broad declines in equity prices, higher risk for borrowers, and further appreciation of the dollar. She also says, though, the U.S. economy, those headwinds, if you will, could be offset by employment gains, income growth, and consumer spending. And she anticipates that global growth should pick up due to accommodative monetary policies abroad. However, the FOMC expects gradual adjustments and economic activity to expand, but the economic outlook, she says, is uncertain. Foreign economic developments, especially in China, do pose risk to the U.S. growth. Those are the highlights of her testimony, which should get underway shortly after 10 o'clock Eastern Time. Back to you.
Hampton Pearson, D.C., thank you for bringing us that. Steve Leisman joins us on set. He's been looking over some of that information as well. What do you make of it?
You know, I think she went about as far as she could. You know, she's still holding on to the towel, so to speak. She hasn't thrown in the towel. Her comments are still in line with the Federal Reserve, whose policy direction is one towards raising interest rates. However, she reiterated that rates would rise only gradually, and she reiterated the idea that it depends on the data. And she talked a little bit how some of the data has softened. She's aware of what's going on in markets. She's aware of what's happening globally on the economy. But she thinks the United States will basically motor through what's been happening.
So this is not going to satisfy those who think that there's supposed to be no hike this year?
Well, you know, no, I don't think so. But again, those people, their view of the economy, their view of markets, by the way, has to be justified by what actually happens to the data, right? So at some point you can be bearish, and if the economy doesn't support that bearish outlook, you would change as well. If you have jobs are going to be stronger, if the U.S. economy rebounds in the first quarter, the way some economists think, then, you know, we're back to the races here.
So I've asked them to bring up two-day charts and everything so we can see if there's actually any move, slight tick up in the dollar at this point. I don't think it's meaningful.
Yeah.
Let's see what the two-day chart on the 10-year yield would show us to see if we have. I don't see any huge movement at this point, but moving pretty flat for the morning.
Yeah. So
and the futures did look lower. It looked like the Dow futures moved slightly lower at this point, maybe suggesting a tinge of disappointment. But sometimes it takes a little.
Yeah, the first couple minutes
right?
are kind of algorithmic trading, and then you get into human trading after a fashion. I wonder if the market, you know, kind of trimmed its expectations to the reality of what Yellen could do. It's one of those things, like, the market may be dumb, but it's not stupid kind of thing, where, you know, you want Yellen to say X, but you know she can't. You know she's going to she's going to run it through the committee. And ultimately, I'm a little bit amazed at how much the market needs to hear what it already essentially knows, in the sense that you know the Fed is data dependent. You know the Fed is not going to hike into a 0.3% quarterly growth rate and an inflation rate that's not moving and a market that's down 10% and going down further. You know it's not going to do that, and yet the market seems to only react when a Fed official gets up there and says what it already seems to know.